The Aegon Strategic Bond Fund is a flexible fund which can invest across the full fixed income universe. For us, we have a particular focus on the more actively traded or liquid parts of the market, which for us is a combination of government bonds, investment grade, high yield, and emerging markets. We only want to invest in bonds and no other asset classes. For example, we don't take any active currency risk within the portfolio. Our investment process is built around what we call our 6 sources of alpha. So this is 6 different ways to generate excess returns within fixed income markets. By design, these are a combination of both top-down and bottom-up factors that drive returns. This is important because as you move from one year to the next, the drivers of markets can change, and this gives us a greater chance to manage risk more effectively and to generate returns. We start off by looking at the top-down macroeconomic backdrop and determine what that means for broader fixed income market risk. This allows us to determine things such as whether we prefer to hold corporate bonds over government bonds, or how much interest rate risk we think is appropriate to have within the strategy. We will then look at individual parts of the market, different sectors, and right down to the individual securities, the individual bonds that we buy to populate the strategy. All of this comes together to help generate returns and manage risk more effectively. Within this strategy, the key risks that you face are a combination of credit risk and interest rate risk. We use these factors to both generate returns where we think it's attractive to do so, but we also have the ability to reduce the level of credit risk and interest rate risk when markets are expensive, and therefore to protect on the downside. We have to be exposed to risks within the portfolio if we want to generate returns. The key thing for us is to determine which risks are worth taking and to make sure that we are compensated and paid for taking those risks. But you should expect then to be focused around the key risks of credit risk and interest rate risk, alongside individual corporate bond risk within the strategy on the companies we invest in. ESG is fully embedded within our research process and forms part of our crucial credit analysis, which factors into this fund and all of our funds that we manage. This is backed by a proprietary responsible investment process that ensures that we identify those companies which have strong ESG characteristics, but importantly avoid those which don't. Through a combination of exclusions and engagement, we want to ensure that we are offering clients comfort that we're exposed to those companies which have a credible ESG record. When looking at this fund, this is the sort of solution for those who are looking for access to a broad set of fixed income based risks and returns. For individuals who are not looking to make asset allocations themselves, switching between different parts of the market, you can do that within a single strategy. And in many ways, you're outsourcing that decision into a single fund. We are looking for the best opportunities within fixed income markets so that you don't have to. So when you're looking to get access to fixed income based risks and returns, this is a strategy that can give you all of that in one solution.